Welcome to another episode of The Financially Free Investor, where you will learn information and strategies on how to become financially independent by investing in real estate, something that is not taught openly in our society today. Financial freedom matters so you can live a bigger life, retire early, and do what matters most to you. Get ready to hear tried and true methods to becoming financially free with your host, Jordy Clark.
Hey everyone, welcome into another episode of The Financially Free Investor. Today, we're doing another episode of the Real Estate Rapid Fire. Unfortunately, due to a schedule conflict, Jay's out of town and I'm just going to be recording this one on my own. So I'm going to just kind of give you some thoughts on where I think the real estate market is headed. And of course, I'm kind of looking at it. I'll look through the lens of here locally in Salt Lake in Utah versus nationally. Obviously, there's no real national real estate market because real estate's local, and honestly, it's hyper local just based on where people are moving and what they want to do and everything like that. So yeah, we'll jump in. We'll kind of look at Utah as a whole. I'll kind of let you guys know some things I'm seeing, and then we'll go from there. So first thing I want to say is everyone, there seems to be two parties out there, and I think both of them are wrong. There's the camp of, hey, we're in a real estate bubble and the market's going to collapse. And then there's a camp of, hey, real estate prices, it's different this time. We're not going to see real estate prices decline. Demand is so strong. Those are kind of the two camps that we find most often, at least when I'm talking to people about the real estate market. So I want to dispel myths on both accounts, and we can get into this later on a different podcast. But the big thing is, guys, nobody knows what's going to happen. That's the honest truth. We don't know if we're truly in a bubble or not. We don't know if, the market's going to keep going just at a slower pace. We don't know if we're going to continue to see extreme price appreciation and rent appreciation. The reality is we're here, we're doing the best we can. So on all your investments, as long as they make sense today and you can lock in good fixed rate mortgages and, it makes sense today based on what it would rent for today, there's certainly lots of upside that you can pick up in the future. But this is not get rich quick. This is get and stay rich for sure. Investing in real estate, there's ups and downs, and the market can absolutely go down. We could absolutely be in a bubble, or we could not. The truth of the matter is, for the last 5-6 years, I've thought we've been at the peak of the market every single year as far as pricing goes, because I look at pricing and I'm like, oh man, I don't see how it can get any more expensive, and then it does. And then you've got, the Federal Reserve just printing crazy amounts of money. They're just giving it away to countries like Ukraine, and, there's baby formula shortages, and gas prices are double what they were 6 months ago, and there's just all of these crazy things. That said, nobody knows where the market's going. As long as you're always investing in the market and you're constantly trying to move forward towards financial freedom, or, if you were already at financial freedom and you're just looking to make sure you stay there, there's a lot that you could always be doing. And the most important thing is that you're always investing in the market. I know guys that sold a bunch of stuff a couple years ago and cashed out, and now they're sitting on, tons of cash, and it's not doing anything for them. And they've missed, an amazing run up in prices, which 2 years ago, I didn't think this was going to happen. I fire sold a couple of properties and I was like, man, I need some liquidity. Let's dump these properties. I sold them either at my cost or at a small loss just to get, some cash back. And the reality is, nobody knows if we're in a bubble or not. Here's what I'm seeing here in Salt Lake. And this is just all statistics taken from UtahRealEstate.com, which is the largest multiple listing service here in Utah, certainly along the Wasatch Front. So number of listings entered is about on par. I'd say it's average for the last 5 years. Number of active listings is going up based on year over year. Active inventory is up. I represent a home builder, and I've talked to a lot of other home builders, sales agents, and one thing that's kind of starting to come back is, builders are now taking a look at offers that are contingent on the sale of another home, which even 3 months ago that wasn't happening, which is just indicative that the market's slowing down a little bit, which it's actually good, because the one thing holding a lot of people back previously was, they'd say, hey, I don't want to list my house without knowing where I'm going because it's going to sell so fast. And, it just creates other problems. People are having to go get bridge loans for their replacement properties, and then they have to buy their house because no one's taking a contingent offer. They have to offer very competitive terms and then go and sell their house. And there's just a lot of stuff going on. So a little bit of a slowdown is kind of what we're seeing. We're starting to see some inventory build up. So along the Wasatch Front in May of this year, we've got about 4,000, just over 4,000 active listings, which last year at this time we were at like 2,200. However, in 2019, we had 9,000 active listings. In 2020, we had 7,500. In 2018, we had 7,500. So realistically, inventory is still low. It has gone up. There's no doubt about it. It is still historically low just looking at the past 5 years. Not quite as low as 2021, though. This was about the time in 2020 when a lot of people are scared about COVID and they didn't list their house. And at least here in the Wasatch Front, what we saw an average decline of probably 700 listings per month. So from May to December, every month we consistently saw 700 less listings, and that compounds. So, from May, it was 7,500 in May of 2020, 7,500 listings that were active, all the way down to December of 2020, there was 2,900. So that's a huge inventory drop. So overall, inventory is still pretty low. Certainly not as low as it was last year. I would expect that you're able to maybe negotiate a little bit on things other than price with sellers and home builders, just due to the fact that it's not quite as hot of a market. However, we're still putting as many homes under contract as is average for the last 5 years. So May of 2022, we've got about 7,900 homes under contract, which is on par with 2018, 2019 data. The number of listings that have went off market this year are historically low, meaning still most homes are selling. So just to give you an idea, May of 2022, 914 homes went off market in Utah compared to 1,200 in 2018, 1,400 in 19, 1,700 in 2020. And again, we kind of saw a little bit of a spike there just because there was so much uncertainty and people didn't know if this was the zombie apocalypse. It was just crazy. So number of sold listings in April, because again, we don't have any data for May because it closed hasn't happened for May yet. 3,900 in April versus 4,300 in 2021, 4,100 in 2019, 3,800 in 2018. So we're looking pretty good as far as the number of sold listings. This is interesting though. April of 2021, we had 748 homes come back on the market in Salt Lake. In 2022, in April, we had 901 homes come back on the market. So I'm kind of correlating that to the tick up in interest rates because it happened so steep and so quick. A lot of people got priced out of the market, and people who had contracted on a new construction build, say 8 months ago, and they're trying to close now and lock their interest rate. If they didn't lock before, they just saw their interest rate go from 3.5 to 5.5 in a 90-day period. So a lot of cancellations from there, and that's giving us a little bit more inventory, and overall market slowing down a little bit. On the multifamily side, the reason Jay couldn't be on this call was because he was at a conference learning from a bunch of multifamily operators across the nation, just seeing their projects and just learning more. Real estate's interesting. I'm glad you guys are all listening to this because it's like working out. If you've worked out once, well, great, but you need to continue to work out to stay fit, get more fit, lose weight, do whatever. It's this constant progression. Same thing with real estate. If you've bought one property, great. If you want to progress, then there needs to be some sort of a plan and growth and education involved with that. It's not just you do one deal and call it a day. So anyways, he couldn't be here on this call. He normally looks at the bigger multifamily data, and we'll probably do a special episode next week just to hear his takeaways on what he learned. But overall, we actually met with a broker. Jay and I toured a 46-unit apartment complex in the Salt Lake metro area a couple weeks back. And as we kind of followed up with him and continued to talk to him, the interesting thing is he was talking to us about another property that they had listed. And 6 months ago, the seller turned down an all-cash offer for $9 million. And today, the seller came back to the broker and said, hey, if you guys can get me anything north of 7.75, I'll take it. So interest rates on multifamily causes cap rates to go up, which means the pricing comes down essentially. So because on multifamily, you're basically buying an income stream. With single family, a lot of homeowners buy, they need a place to live, raise their kids. Multifamily, if someone's looking at a 40-unit apartment building, they're not living there. It's purely an investment. So they look at it differently. They run the numbers and pay based off of what you can get current interest rates on debt at and what the future cash flows are going to be. So the interesting thing is we're in an inflationary environment where inflation's at a 40-year high. I think it's well over 8% now, at least the CPI, which is what they're telling us. I think real inflation's probably closer to 11 or 12%. And, we're seeing that in rent increases pretty much across the board here in Salt Lake. Rents year over year are up anywhere from 15 to 20% if you're managing it correctly. So, and I don't see that stopping just because insurance is more expensive and lumber's more expensive, bricks are more expensive, everything is getting more expensive. And unfortunately, it's going to be passed on to the renter. And there's going to be no reprieve, I believe, for them just because they're renting. And so the control that you have when you're renting a property is very little. And most savvy landlords are not going to say, you know what, even though my insurance is costing me more, if they're having a tenant turnover, I'm not going to raise the rent and go to market. No, most landlords are going to go, well, gosh, we need to raise the rent because everything's getting more expensive. And they have bills to pay too. So more and more though, I think a lot of people are going to get priced out of home ownership, which is a little bit sad, but that means there's going to be more renters. And so, the more renters there are, the more opportunities there are for young aspiring landlords or anyone that wants to really improve their financial situation. So with all of that said, I don't know if we're in a real estate bubble. No one can really know until we have hindsight going for us, which historically has been 3 to 6 months. So really, we won't know if we're at the top of the market until 3 or 6 months has passed, and then we can historically look back at data and go, oh yeah, that right there was the peak, or that was the valley in prices or whatnot. So anyways, guys, this was an episode of the Real Estate Rapid Fire. Hopefully you found value in it. Have a good one. Thank you for joining me for another episode of the Financially Free Investor. If you found value in this episode or know someone who would find value in this information, please share with them, subscribe, and send us a review.